Hey guys, welcome back. In this video, we are going to solve a type 2 problem from insurance claim chapter, and this is second video related to this chapter. And we have already uploaded the one comprehensive problem which has been from loss of profit, and this is loss of stock. So loss of stock is the loss of stock. This would be the max level problem. They can be asked. It can be asked. Okay. Let's quickly work out this problem and get to know this concept. Okay, insurance claim is what about this insurance loss of stock is. Okay, loss of stock by fire. So this chapter is full of fire only. So loss of stock by fire. So fire can be occurred if it is the 31st March 2025. So fire can occur at any time period. So okay, this would be fire if fire occurs on 1st June. So this period would be the memorandum trading account we have to prepare. This is the working paper trading account we have to prepare and find out the closing stock on that fire date. So based on that only we can find out the policy amount, which can be partly payable by the insurance company. Okay, to find out the closing stock on the date of fire as a balancing pair, we need to find out the GP, right? GP should be findable. Then only we can find out the closing stock. To find the GP percentage, we need to find out the trading account, which is for the previous year. So we have to prepare the previous year trading account to find out the GP. With the GP, we have to find out the GP for the memorandum trading account, and the closing stock on the date of fire should be the balancing figure. With that, we can easily find out the loss of stock and the amount of claim which is relatable, which is actually payable by the insurance company. So all these things will be findable in the proper manner. Okay, so let's quickly jump into the problem. This question revolves around 4 steps, which is first we need to find out the trading account for previous year, memorandum trading account for till the fire date. This will give us the closing stock on date of fire. This will give us GP percentage. Then we have to find out the loss of stock by fire. Okay, then we'll calculate the claim amount. That's it. Here 4-step problem. First, what the question is actually given with on 1st April 2023, the stock of Mr. Hari Prasad was destroyed by fire, but sufficient records were saved. Okay, sufficient records that's the memorandum trading account details. Okay, sufficient details have been given. So this is the data of previous year. We need to find out the GP percentage, right? And this is the data for till the fire period. So fire happened on 1st April. So till 31st 2023, the details are given. What's the purchases, what the sales has been given here. In value in the closing stock for the balance sheet at 31st December 2022, 4,600 had been written off on certain stock, which was a poor selling line having the cost of 13,800. So what they are saying is 13,800 is the worth of good. It's the cost of the good worth the 4,600 has been completely removed from the books, due to poor selling line. So they have been removed, which is what they are saying it as certain written off on certain stock. Okay, written off, they have written off this 4,600 amount has been written off from the stock, but a portion of these goods were sold in March 2023 at a loss of 500 on original cost. Okay, original cost of which is for 9,600 has been sold for 6,400. Okay, so what they have thought is the 13,800 worth of goods, 13,800 goods of the goods were removed from the books, since it has a poor selling line. But those goods, half of the goods were sold at the next period at the loss of 500. So what we have to do? We have to add that written down value to the closing stock of trading account for the previous year. So then only we can calculate the correct GP percentage, right? Okay, then the next okay, this thing is over. This is the crucial part in this problem. Other than that, everything is simple. Okay, the remainder of the stock was now estimated to be worth its original cost, subject to above exception. Gross profit had remained at the uniform rate. Okay, this is the exceptional item, this is the loss. Other than the gross profit percentage is similar for all the remaining products. Okay, value of stock salvage, which is stock worth 11,600 has been saved, and the policy amount is 1 lakh, and it is subject to average class, right? So they asked us to find out the claim of loss by fire. So let's quickly jump into the problem. First thing, trading account we need to prepare for what? For to find out the GP percentage. Okay, for the period ending 31st, okay, for the period 1st Jan 2022 to 31st December 2022. Okay, this is the table. To opening stock. Okay, what's the opening stock on 1st January 2022, which is 1,47,000. Okay, what's the closing stock by closing stock, which is actually 1,59,200. So there is a value that so that we have to add. We'll add once we'll finish off other details also. What's the purchases? Purchases is 7,96,000. What's the sales for the period, which is 9,74,000. Okay, to gross profit carry down that we have to find out. Okay, we'll calculate the closing stock now. Closing stock they have given is 1,59,200. Plus what they have said is they have removed the 4,600 worth of stock, which has actually have a selling capacity of 500 loss. Okay, so that we have to add back. So 4,600 added, so 1,59,200 plus 4,600, which is 1,63,800 is the closing stock. Okay, when we calculate the GP, what's the GP? 147 plus 796 minus 974 minus 160. Okay, 1,94,800 is the GP. Okay, so GP ratio is, which is GP percentage, GP by sales into 100. What's the GP? 1,94,800 divisible by 9,74,000 into 100. Okay, 194,800 divisible by 974 into 100, which is 20% is the GP percentage. Okay guys, let's prepare the memorandum trading account now, which is the step 2. Memorandum trading account for the period 1st Jan to 31st March, right? So that's the before date of fire 23, right? So open the table. We have a opening stock, which is how much? Opening stock is 1,63,800. What's the purchases we done? Purchases what we have done is 3,24,000. Okay, what's the sale value? Sales is 4,62,400. Right, we have to find out the closing stock on the date of fire and gross profit. Okay, we can calculate the gross profit, which is, let's create the working note. Okay, so what's the sale value, which is 4,62,400, right? This is the sale amount. Now 4,62,400 is the actual sales. We have to remove the abnormal sales. What's the abnormal sales? Abnormal sale is 6,000. This is 6,900 is the cost. 6,900 minus 500, which is 6,400 is the abnormal sales. Okay, 6,400. This is the 6,400. Okay, there is a loss rupees 500, cost rupees 6,900 is the value. Okay, when we deduct this 462,400 minus 6,400, which is 4,56,000 is the normal sales. This is the abnormal sales. Okay, this is normal. Okay, normal sales is 4,56,000. For the normal sales, we have a GP percentage, right? So this is common. GP percentage remains same for normal sales. Okay, 4,56,000 into 20%. Okay, 91,200 is the GP percentage, gross profit. Okay, and there is a loss which is 500. Net of, we'll get the 90,700 as the GP percentage. Okay, so GP percentage is 90,700, right? So we have calculated the gross profit, which is 90,700. So what's the closing stock on the date of 5, which is 163,800 plus 324 plus 90,700 minus 462,400, which is 1,16,600 is the closing stock on the date of 5. So now we have calculated the closing stock on the date of 5 also. Let's quickly prepare the third step, which is loss of stock. Calculating the loss of stock, actual loss of stock. Closing stock on the date of 5 is 1,16,100 minus stock salvage. Stock salvage means saved stock. Last stock salvage means sale stock, that is 11,600. Okay, 11,600, which is 1,04,500 is the loss of stock. So we have calculated the loss of stock also. Now we have to calculate the claim amount. Okay, what's the loss of stock? 1,04,500, right? Okay, what's the policy amount? Policy is 1 lakh, right? Then there is a under insurance. We have insured only for 1 lakh, but there is a stock which is for 1,04,500. So there is a loss of stock. So we have to calculate the average. We have to apply the average clause. Okay, we have to average out the claim based on the stock we have and the policy we subscribe. Okay, so what's the loss of stock, which is 1,04,500? The formula is loss of stock into policy amount divisible by closing stock on the date of 5. Okay, loss of stock we have is 1,04,500 into policy amount, which is 1 lakh. Sorry, we should not compare the loss of stock here. This is the closing stock. For the closing stock, for the stock level, we have to compare the policy amount. So anyways, that is the concept. The thing is similar, but the comparison should be closing stock on the date of 5. Okay, that is 1,1600. Okay, that is a under insurance, right? Okay, 1 lakh and closing stock on the date of 5 is 1,16,100. Compare this. So the claim amount is 90,009 rupees is the claim amount. That's it. Let me give a quick recap of what we have seen here. So the thing is, there is a loss of stock happened. They are given with the previous year stock level to find out the GP percentage, and the current year details to find out the closing stock on the date of 5. So we have got both the figures, and they are also given with the some other poor selling item which has been actually returned or removed from the books, but since it has been sold, in the during the next year, they have added back to the closing stock level and found out the GP percentage as 20%, right? Then there is a memorandum trading account we prepared, and we calculate the gross profit by segregating the normal sales and abnormal sales. Normal sales is usual sales that has to be removed the sale value of abnormal sales. Then we'll get the normal sales. Abnormal sales is 6,400. The loss is 500. The cost is 6,900. Net of the loss with the profit, we'll get the actual gross profit, which is 90,700 that we have inserted here. And the closing stock on the date of fire is the balancing figure. Okay, with a closing stock on the date of fire, and then we have a closing stock, we have a loss of stock, right? Closing stock at the date of fire deducted by the stock salary saved stock, we'll get the actual loss of stock we got. Okay, then we have to calculate the claim amount. For the closing stock only, we have to compare the policy amount. Closing stock is 1,16,100. The policy amount is 1 lakh. Comparing that, we came to know that there is under insurance, so there is an average cost apply. Loss of stock is 1,04,500. Policy amount is 1 lakh. Loss closing stock on the date of fire is 1,16,100. So calculate that, we'll get the claim amount. We'll get the claim amount of 90,900 rupees. That's it. Thank you.